G'day guys, Josh here. Welcome to another episode of Financial Fruits, episode 19, and this one's going to be about day trading, okay? I haven't got any messages really to, talk about this, but I've been seeing a lot of stuff in my timeline on Twitter about day trading. And if you're unaware of what the term day trading is, by the way, of course, this is not financial advice in any sort of way, or anything talked about in here is not financial advice. I have not considered any part of your circumstances. This video is not sponsored by anyone. This does not promote any sort of product or anything like that. If you feel like it does, then I tell you right now it doesn't. Okay, so day trading, if you guys aren't aware, let's get back to it. The definition of day trading is basically when you trade shares on a daily basis. Okay, on a daily basis, or sorry, that doesn't make sense. Okay, but that's generally day trading, or trading shares during the session, the daily session. So for example, let me just put it this way, I'll probably explain this in the most horrible way, but on Tuesday you would go through, let's say, about 10 to 20 trades a day, okay, which is a lot, a lot constantly, okay? So let's just say that's the case. Like say Tuesday you went through 10 to 20 trades that day, and Wednesday you did the same, Friday you did the same, Thursday you did the same, etc. Okay, so basically it means you trade a lot, you trade frequently, and basically a lot of high tier players like the banks do high frequency trading, which is basically day trading. And there's also people who do it as a hobby or as a profession. Okay, there's a lot of people who there are a lot of scammers in this area who promote this way as a way of getting rich. And I'm going to tell you straight up, day trading is difficult, okay? It is difficult, highly risky. It is up there with Forex, okay? Now, the main reason why it's very risky is that basically you have heavy exposure to volatility, okay? Very heavy exposure to volatility. Like, incredibly heavy exposure, because you buy a share, it can go up and down very quickly. If you want to sell and get out of that position very quickly, which a lot of day traders do. They set up day traders, also trade heavily in derivatives where they've got to get rid of that share in probably 10-day or 5-day period. It can be, very risky in day trading, and you can easily lose money very quickly in it as well. Now, day trading as well, on the upside, you can make money quite quickly, depending on how skilled you are at knowing the market. Most of it is just luck, okay? Day trading, I can tell you right now, day trading is effectively gambling if you have no idea what you do. If you have no idea what you're doing. Like, it is just, I can tell you right now, it's just gambling at this point. Because basically, you're not really invested in the share, you just invest in the natural path of the share, which is a natural path, as in the share guide. There's a lot of books that talk about this theory of natural path. I forget the guy's name, and it just goes anywhere. Okay, so you just pretty much hoping the wave goes up or the wave goes down, depending on what you want to do. Now, with the day trading as a kind of a tool, day trading versus long-term investing, overall, day trading is more riskier. There is more reward, but it is never going to be stable. Long-term investing, less riskier, still obviously high risk, because it's shares, stuff like that, but the reward is more smoothed out rather than being stable. Now, you can get best of both worlds, like an active trading ETF or LIC, where they actively manage assets. You can be purchased, which they trade as well, and but they charge a higher fee, but they charge a higher management fee. So be aware of that as well with day trading. Now, reason why I don't recommend day trading too much It's because day trading is just very, very risky, and sometimes you generate less money than you would have if you just held it for a long term and take the income payments as they are. Generally, with markets in general, so we highlight this day trading and get rid of it. With markets in general, patience usually wins in the market. Okay, hence why long term investing is favored by a lot of people. It's because the more patient you are, the more patient you are with shares and just waiting for the bounce back and stuff like that. You get the income payments from time to time as well. Generally, you get more rewarded for it as well, given that you studied the company and stuff like that as well, and have had good research into it. Where you see, if the share goes down by 50%, you sit there going like, well, it's still generating the same amount of profit it did previously. It's still got the same income and it's still got the same assets. Nothing has really changed, so I can put more money in there. That sort of stuff that I'm really, really talking about. With day trading, it is completely you're just hoping it goes up or hoping it goes down based on day-to-day information, which could be incorrect the next day and stuff like that as well, which you've got to be very, very careful of. Overall, like we've also done a quick comparison between day trading and long-term trading. A lot more people into the day trading side, given the fact that you don't know what's really going to happen and it's more active compared to the long-term investing. Hence why a lot of people who are into the penny stocks and stuff like that are heavily promoting it and will have stock tips and stock highlights and stuff like that every single day. But in reality, with investing as well, investing is a science somewhat. Science somewhat, yeah. Where you have to sometimes wait it out and just observe how the market is reacting. Now the thing is with day trading that a lot of people get caught up in the market because they are, because of themselves or because of other people trying to exit positions. Now, someone may be like, oh, what do you mean by that? Some people post stock tips on certain shares to get people to buy up so they can sell out. Fund managers do this a bit, okay? Where they will promote a share based on information and then sell out of it and then the share goes down, kind of thing. So you gotta be careful with that. There are bad actors in the day trading space. And this is why I'm pretty against day trading as well, is that there's a lot of bad actors and people, form conglomerates so they can influence the market, because when you get big enough, you can influence the market, where they'll buy up a certain stock and then immediately sell it off once, people have bought into it so they can make a bit of money. Now, that is illegal, by the way. Okay, that is illegal. You're not allowed to do that. But people do it and then justify it differently so they can get away with it. And trust me, there's a lot of people that do it as well. And there are certain computer programs and stuff like that as well that will automatically sell off at a certain price point as well. So just be aware that the market can be very, very unfair. And if you're day trading, then that's why it's highly risky, because you get the adverse effect of bad actors. The market's volatile in itself anyway. It's very, very punishing. And that's pretty much the case of it. So with day trading, I'm going to say right now, unless you absolutely know your stuff in the stock market space, don't bother doing it. Just stick with the long-term investing. It works better in the long run. It reduces your stress, and you don't have to panic every day in, day out whether or not you're derivative sold or not. Anyways, guys, that's going to be it for today. Hope you have a good one. See you guys later. Peace out. Bye.